welcome to ForexTV.com. Today's Thursday, August 20th. I'm Tim Kelly with your New York Forex Market Buzz. Currency trading among the majors are seemingly adrift up till mid-session today, with the exception of the U.S. dollar against the Canadian dollar, with seeing loonie make impressive gains against the neighboring greenback. U.S. equities are holding modest gains, while crude oil futures and gold are marginally down on the session. The yield on the 10-year note stands at 3.45%. That is unchanged on the session. Research group The Conference Board released its report on leading economic indicators in the month of July on Thursday, showing that its leading indicators index increased for the fourth consecutive month. The report showed that the leading economic index rose 0.6% in July, following an upwardly revised 0.8% increase in June. Economists had expected the index to increase by 0.7%, matching the increase originally reported for the previous month. And while recent data has shown some signs of stabilization in the labor market, the Labor Department released a report today, actually this morning, showing that first-time claims for unemployment benefits unexpectedly increased in the week ended August 15th. The report showed that the initial jobless claims rose to 576,000 from the previous week's revised figure of 561,000. The increase came as a surprise to economists who had expected jobless claims to edge down to 550,000 from the 558,000 originally reported for the previous week. With the unexpected increase, job claims rose for a second consecutive week, although they remain well off the highs seen in March. Well, today we're joined by Andy Busch, Global FX Strategy at BMO Capital Markets. Andy, welcome to the program.
Thanks very much.
Andy, speaking of back in March, you were one of few dollar bears, and boy, did that work out. I think I said to you before the interview, about 90% of the people I talked to were very bullish on the dollar, and the other 9% were kind of in the middle. And that leaves yourself, and that has worked out quite nicely. And what is your sense so far? And maybe we'll talk a little bit about another topic we discussed back then, is the burgeoning deficits and the spending by the current administration, and how that's faring and how that's being reported. Sure.
Basically my analysis is fairly fundamentally driven, and looking back into March, we knew several things were happening. One was that we were seeing an end to the credit crisis and an easing of credit conditions. So we knew that there wasn't going to be nearly as much demand for U.S. dollars for debt repayment. So we knew that was going to ease. The second thing we knew was that the Federal Reserve was going to engage in quantitative easing. And the third thing we knew was that there was going to be some massive budget deficits. So those are low-hanging fruit as far as I was concerned, and we certainly saw a very strong reaction by the U.S. dollar in losing quite a bit of value. To some extent, we haven't really changed our point of view on it. It's interesting to see that people like PIMCO and Warren Buffett are now coming around to this type of thinking and pointing out the fiscal situation in the United States in the difficulties that are there. So the themes that we saw at the beginning of the year really continue on through now, and probably will continue on through the end of the year.
Okay. Andy, I'm just looking at some of your notes from this morning, and you talk a little bit about, let's first talk about the deficit reporting. And you made some analogies between the UK and the Obama administration. What is the exact significance here, in your opinion?
Well, I think it's the difference between the United States and the UK is that the UK announced some very poor numbers today for July, that they were the market had been expecting that they were going to have to increase borrowing by about 600 million pounds, and they came out with a net requirement of about 8 billion. So from 600 million to 8 billion, that tells you that there's an enormous pressure on the fiscal situation in the UK, and that it's primarily driven by lack of tax receipts. On the other hand, what I was trying to make the comparison with the Obama administration is that they're leaking out that their fiscal deficit for 2009 is only going to be $1.58 trillion versus the $1.84 trillion that was forecasted in May. But there's a lot of sleight of hand with this because essentially the whole reason why that's not going to have the 1.8 is because they're not going to do a TARP 2. So in other words, the credit conditions, stabilized back in March and into May. There wasn't a need to put out another $250 billion out there. It really obfuscates the major problem that the U.S. is having, along with the U.K. The U.S. is seeing a major drop in receipts or tax receipts from individuals and corporations. The numbers are actually worse than what they forecasted by about $83 billion. So that's what they're kind of not telling you that's happening, and I think that's important because we're going to continue to have fiscal problems in the United States going forward, and anyone who looks at the initial headlines like U.S. deficit to be trimmed to $1.58 trillion it's just wrong.
Right. And, Andy, speaking about TARP 2, the stimulus monies, I saw a report on Bloomberg that said only about a third of that money from TARP 1, if we say that, and the
stimulus,
the Stimulus Act, yes, it's not TARP, but the Stimulus Act. About a third of that has actually reached the economy. There's a big lag in there, and that's got to cause a lot of confusion to a lot of folks. So, look, about 6 months ago, you put some very obvious lines together, connected the dots, and where most people didn't. It seemed pretty straightforward at the time, and you were one of few. What do you see going forward, and what do you see the obstacles for the U.S. economy right now? Half of the world sees them leading us out. Half of them sees a double dip. As far as I am concerned, folks that I talk to, it's roughly split down the middle.
Yeah. Well, I'm pretty sure we're going to get growth in the third quarter. It could be fairly strong depending on how the quarter ends up here as we get into August and September. The inventory rebuilding, it will not take very much to get a jump from inventory rebuilding and from capital expenditures to get the economy to grow. How fast it can grow, I've seen optimistic people say as high as 3%, other people say maybe just 1%, but it's definitely going to grow, and it's likely to continue into part of the fourth quarter. What's worrisome, and this just is the key point for the U.S. economy, is that, as everyone knows, the consumer is about 70% of the U.S. economy. At least it was in the past. Now we know that the consumer is holding back. They're saving more. The savings rate up almost near 7%. The retail sales number that we had just last week was very disappointing, even with the cash for clunkers in there. So we think that going forward, as far as the economy goes, we will not have the same degree of rebound strength that normally you would have coming out of a recession, because the consumer, they're still losing jobs and they're not spending money. Well, those are the two things that really will cap any excess growth that you'd normally get at this time.
Right. Andy, let me go a step further. Look, the consumer, a big part of the economy, everybody knows that. But behind that is also small businesses are the biggest employers of those consumers.
Right.
Now, you mentioned three month LIBOR OIS. That gives us an indication of lending, of interest rates, right?
Right. Well, what it is just the spread between 3 month Eurodollar interest rates and 3 month Fed funds or overnight index swaps. And basically, it's an indicator of credit concerns within the economy. Prior to 2007, that was 5 to 10 basis points. It had blown all the way up to 346 basis points at the height of the crisis. Right. Now it's back down to what we would consider normal of 25 basis points. But the key thing to that, and the reason why it's come off very sharply, is because there is no loan demand. If you look at the survey of lenders that the Fed puts out just this past week, it showed continued drop in demand for loans. So there's a couple more things going on there than just improving credit conditions. There's actually a drop in the demand for money as well.
Right. So, Andy, that's my point at this juncture. If businesses are not requesting loans, they're not growing, they're not hiring.
Yes, that's a great point.
I mean, this just, if you run a business, you know this. Not to mention, credit is a lot more expensive. Some of the new regulations that have gone through, small business credit, some of those interest rates have gone up, on existing lines of credit. Now those borrowers have the option to opt out of that, but that's just crushing a lot of these small businesses. There are certain businesses out there paying 16%, and their interest rates are going up to 27%.
Right.
And so, I think there's a lot more there. We could spend a whole lot of time on that, but I want to, we're not going to do that right now. But just want to get your thoughts on, so at the end of the day here, Andy, in closing up here, what do you see by, let's take those binoculars out and look towards 2010. Where do you see us going at that point?
Sure. I think, later on in 2010, I think we're going to get growth, and I think growth will return globally, but it's certainly not going to be exceptional growth. My guess would be in the first quarter, there'll still be quite a bit of debt write-downs going on by the banks, and specifically for commercial real estate loans. There'll be a lot of discussion about that going into 2010 and 2011. And my belief for the currencies is that at some point we'll reach a pretty strong trough or a low for the U.S. dollar, and from there I think we'll regain some ground. We certainly know that the trade situation in the United States has improved dramatically, but I guess the key thing that I'm looking for from the United States is whether or not they engage in continued quantitative easing and continued fiscal irresponsibility. If that's the case, then it's very likely, the dollar won't regain much of its value that it loses toward the latter half of 2009.
So bottom line, you see further dollar weakness going forward?
Yes, into 2010, definitely.
Okay. Hey, Andy, appreciate it. Let's leave it there for today.
Okay, thanks.
This has been your New York Forex Market Buzz with Andy Busch of BMO Capital Markets. If you'd like to interact with Andy, visit us at www.forextvconnect.com or click on this video, leave some comments and questions. We'll get back to you. I'm Tim Kelly. Join us later this afternoon for PM Exchange with guest Kevin Chow of IDEA Global Markets right here on forextv.com.